Welcome back to Trading Rolly. Taking a look at the Bitcoin chart. Will we see a bounce this weekend or more downside action? I'll do some TA, technical analysis. As usual, we also have some FUD, fear, uncertainty, and doubt in the headlines. Take a look at that. At the end of the video, we'll do an altcoin lightning round. Instead of an altcoin of the day with a full breakdown, we'll do a quick skim through the alts, see if anything jumps out at us. So go ahead, hit that like, leave a comment, subscribe, tick the bell for notifications. Remember, these are my own ideas and opinions on the market, so please do your own research and trade at your own risk. I am not your financial advisor. All right, let's look at the market. Mostly sideways. If you're looking at the top 15, top 10, pretty much sideways. XRP is down 6%. We'll see some volatility with that airdrop coming in the next day or so. Market's waiting on Bitcoin, so we'll get into that. Crypto fear and greed index at a 90, still sitting up pretty high on the fear and greed index chart, chopping around at the top of the screen, nowhere left to run to the upside. So we've been monitoring, and so we've been chopping. Nothing to report new on that. All right, some headlines real quick. U.S. lawmakers tell Mnuchin to back off from potential crypto wallet regs. This is actually on the NASDAQ site. And at least we're seeing a headline saying that U.S. lawmakers are telling him to back off. But we have been seeing this FUD with a possible regulations coming in at the end of Trump's presidential term. And the market's slightly fearful. There's lots of FUD headlines surfacing right around this time, which is always interesting. We're at this critical 20K resistance. Are we backing off because of the technicals, or is it the regulations? Maybe a little combination of both, okay? And then you have more FUD here with the New York Attorney General expects documents within weeks in Bitfinex Tether case. I don't know if anything immediate is going to be happening with this. I mean, this has been a story going on for a couple of years now. It's more Tether FUD. Basically, USDT, the stable coin, has had a lot of controversy. Is it fully backed or not? And people basically say if there's a case against Tether, and say for whatever reason Tether is taken down and deemed illegal for whatever reason, this could dramatically affect the Bitcoin price. But we've been saying that for almost 3 years now. So, we're at this critical resistance, and now the FUD stories come out. Maybe next week we'll see the bull stories come back. To finish up, though, with the headlines, I wanted to point this one out. Millennials will boost Bitcoin adoption for years to come. So, guys, we are at the early adoption stage of Bitcoin. I forget the exact number. It's been a while since I've seen it. But less than 5% of people in the world, roughly, are using cryptocurrency. So we're definitely still at the beginning phase. It's not widely adopted. The millennials are boosting this adoption, of course, because we've grown up with computers, laptops, cell phones. For us, it's not too difficult to use the apps to purchase Bitcoin, or it's not too difficult for millennials to do, a day's worth of research to figure it all out. It's not that difficult, and we have all of the avenues to discover what we need to know about Bitcoin, where the older generation, 50, 60, 70-year-old guy, he's still trying to figure out Google, okay? So I'm sure Bitcoin's difficult. So, our generation and the millennials, they understand technology. They have more faith in technology, where older generations, they don't even understand what Bitcoin is, and, can it just be hacked? So it's taking the younger generation to instill that confidence. But what I thought was funny was the beginning of the article says millennials they're a generation beleaguered by student debt, low pay, and a lack of savings. I don't know if that's really the generation you want leading the charge on an investment. people who obviously do not know how to invest properly. But at the same time, Bitcoin and crypto is a way for these type of people who typically do not have a savings account, typically have not been investing in the stock market. It was a way for them to be introduced into a type of savings, and maybe their introduction to Bitcoin and learning how to dollar cost average, learning charts, learning to put money away for Bitcoin will introduce them to the stock market down the road and give them better ideas of how to save. So it's kind of a double-edged sword. You have these newbies who don't know much about investing getting involved, but the good news is they are getting involved. All right, enough of the headlines. Let's get into the real meat of the subject. It's the TA, the technical analysis, because I am a technical analyst. It's easy to get them confused. All right, guys, I want to actually start with the 4-hour on Bitcoin. We've been looking at the weekly at the beginning, looking at the macros. Yes, we know Bitcoin is in a macro uptrend. So let's actually take a look at the 4-hour real quick, because I did see something interesting, some bullish divergence on the 4-hour. You can see the price moving down. You can see a low and a lower low, but your RSI, you have a low and a higher low. So the RSI is moving up as the price is moving down. This is bullish divergence, can often be a good signal for a bottom. And your 4-hour Stochastic is hinting a cross up. So the cross up on the Stochastic with the bullish divergence, it's good to see. One more step to the puzzle is going to get a close. We need a close above 18,260. Your yellow 21 EMA, is creating resistance here. You can see the resistance there. And we would like to see a close above 18,260 to, add more bullish confirmation. We got the bullish divergence on the RSI, getting the Stochastic cross up. Now, if we could get that close above the 21 EMA, can feel more confident. We did bounce perfect off the support of this 200 EMA, light green 200 EMA, 17,550. Price kind of getting squeezed between the two unless we can see that breakout. So immediate resistance, 18,260. Immediate support, 17,550. So that's what we're looking at on the lower time frames. Going out to the daily. On the daily, we did get another close below the 21 EMA. So that will now act as resistance. And it's actually lining up with the 4-hour. So the daily 21 EMA is at 18,260. What did I say the 4-hour? 18,260. So we're currently at 18,290, but we're only 30 minutes into this 4-hour candle, only 30 minutes into the daily candle. So plenty of time to go, but that seems to be the level to beat. It's funny, the 4-hour 21 EMA and daily are the exact same price right now. So that will be your resistance. If we do happen to drop lower, losing that 4-hour 200 EMA, we could come down to the 50 simple, 16,650. Anything, drastic, let's say maybe next week, there's some terrible regulation news, black swan event. We have support down here on the daily, 12,841 on your 200 EMA on the daily chart. Going back to the 4-hour real quick, we were looking at some horizontals. I was looking at this level here, and you can see that we bounced there, wick below it. And let me close out the moving averages. And we did the same here. And I was saying if we got a 4-hour close beneath it, that could potentially trigger further sell side, but we ended up bouncing anyways. So again, guys, and this is something you'll learn. It can be very frustrating. Not every indicator is perfect. Not every horizontal is perfect. Just because you get a close doesn't mean it's time to rush into shorts. It's just going to give you more hints. We're just looking at all sorts of different things and looking for hints of what possibly could happen. So you did get, the close there. Price did move lower, but it wasn't a large sell-off, okay? So I just wanted to point that out because yesterday's video we were looking at that level as a potential critical level. But it's interesting, now that we broke back above it, you retested it as support and now getting a bounce. So it's still providing some support. It's still a critical level. Just wanted to throw that out there. All right, let's move on. Go out to the daily. Look, so that level there, the candle closed back above it, wick below, close above. So was it critical to hold above it on the 4-hour or more critical to stay above that level on the daily? And actually, the higher the time frame, the better. So a weekly is going to trump the daily is going to trump the 4-hour. So you got to close below on the 4-hour and didn't really see that big of a reaction. And at the end of the day, we didn't close the daily below it. So maybe if you're still looking for a bearish confirmation, you would want to see the daily close below that horizontal at 17,865. All right, but getting a bounce from that level right now, and your daily Stochs still crossed down. So you're getting that 4-hour crossed up. If we can see any continuation to the upside, maybe we'll get the daily crossed up, but you're still coming down on the daily, so that would still infer some bearish pressure, and you still have a downtrend on your RSI, still waiting for this downtrend to break on the daily RSI for further confirmation. CME did close today, will be closed for the weekend. The volume drops off on the weekend, and with that drop off in volume, it can make price action more unpredictable. So less volume means less liquidity, which means that price can be manipulated more, which is sometimes the price will move in the opposite direction of the general trend, and that's why you'll have a gap on the CME when you open back up futures on Sunday evening, and then sometimes the gap fills because it was actually due to price action moving in the opposite direction. Sometimes these are just scenarios. So if you look at the CME chart, CME closed right around, so on CME price 18,020, okay, and there's slight discrepancy in price, so pretty much right around where this daily candle out closed, I would say would be roughly that spot. So if price bounces over the weekend up here on your CME, you'll say price came up to let's say we broke up this way for whatever reason, you'll open up with a gap in this region, and then you could potentially see price drop to fill that gap. However, if this weekend the price falls, then you'll have this gap above. Now, there's going to be a big difference in what happens, and this is what I'm leading up to. Let's see. Let's just do a quick rising channel. I have noticed you could draw, let's say, a rising channel right here. We'll turn this one green so you can see it for the purpose of this exercise, we could say. So you have, you have this rising top and rising bottom, a high, higher high, a low, a higher low. So possibly, you're in this like rising channel. You can see that there's a touch here. So 1, 2, 3 touches. 3 touches to confirm a trend line. So the significance of this channel, though, is if over the weekend the price rises up this way, and then you had a gap below, you could come down to fill that gap. bounce off of your rising channel possibly to fill the gap and then continue up higher. But if we drop over the weekend and you have a gap above and say we fill that gap and then reject after filling the gap, what's going to happen is now, let me erase this one here. Now you're putting in lower highs on your chart here. So say over the weekend you dropped, you had a gap above, you filled the gap, hit that resistance. So this is support, it would become resistance. If you lose it, support, flip, resistance, rejected, come down. Now you have a high and a lower high. So we don't want to see price drop over the weekend. To summarize, we do not want to see that happen. All right. So that's the game we're playing with the weekend price and CME. All right, what else did I have here? I wanted to look at the fib retrace, and I wanted to look at the fractal. We could do the fractal real quick. The fractal people have been talking about as well. If you look at this here, you had a rise, dip, but a higher low, and then you rose again, chop sideways. It looks very similar to right here. Rise, dip, rise, dip. Do we get another rise here? Like we were talking about possibly over the weekend. Then come down, chop this way, and then we go higher. This would look a lot like that. Fractals are fun to play with. Basically, fractal is like when you see basically identical price action from before. Could it play out again? Possibly. Possibly not. People were saying that this right here looked very similar to that. People were trying to call this a fractal. It does look similar. This part looked very similar to that part, but then you had a dump here. Ended up carrying on higher, but it did dump. So will this be one of these? Or will this be one of these? Who knows? I don't know. You probably don't know either. But we can all put our bets, right? We can all place our bets. All right, so that's a fractal that people have been talking about. And then I want to show some Fibonacci retracement levels. All right, so we can draw two different fibs. We can draw a fib from this swing low to this swing high. If we do this swing low to this swing high, it would basically be a retracement looking for the trend to continue. Basically, you have a high, lower, a high, higher high, higher high, low, higher low, higher lows. So if you did a retracement from here to here, and you bounced from your 0.618, that would line up around 13,570. So something like that. Say you came down here and then you bounced. Macro, you're still putting in that same uptrend right there. Now, and so if you think we're still in the uptrend, definitely do your retrace, fib retrace from this low to that high. You can see your 618 will be with that, lines up with this macro horizontal. If you look at your weekly that we've been going over for months here, that would bounce right around that high, 2019 wick high, if you came down to the 0.618. So that's your golden retrace and would line up with the bounce here. On the macro, it looks pretty well. Okay, so let's look a little closer. Let's look at some of the other levels. Say we came down to the 0.382. That would line up with the 16,150 weekly that we've been looking at. And that was using that weekly candle body close back over here. We had that weekly horizontal. So your 0.382 would line up with that one. Your 0.5 is around 14,760. So anything in this region is fair game if we happen to drop any lower. Now, if you think that this is kind of a market cycle and that there's going to be a lot more of a downturn, and it's going to take a lot longer for price to recover. Okay, something more like this, like a full cycle to the top, and all the way down over a long period of time. We might want to do this swing low from much lower, possibly from this swing low to that swing high. It's going to give you different retrace levels. Your 0.382 is now lining up with my 14,000 level, lining up with that top. That's your 0.382. Your 0.618 golden retrace is now all the way down at 9,900, which would flip that level here. You can see, but you can see that you had a resistance level here. There was a resistance, flipped as support and rallied hard. So if you do your retrace from all the way down at the very bottom to this top, and your 618 is going to line up with a bounce from that region down at 10K. So if we're still in a strong uptrend, I would imagine we bounce from the 16K to 14K level. But if this is more of a market cycle and it will take more time to correct, your 0.382 is at 14K, 618 down around 10K. So it depends what kind of correction we're looking at. It's too difficult to tell at this moment here, but I wanted to present both of those options for you. Regardless, I still like the 14K area as a buy opportunity. If it came down to 10K, I would buy there as well. All right, so I wrapped that up. And let's just finish up with the weekly. I've kind of touched on that for a while. That's your 20K resistance. We had the 16K level from that candle close, and we have the 14K level here. And then you're above all moving averages. And as long as you're above all weekly moving averages, I usually feel pretty confident that the overall sentiment is bullish on the macro level. And your stochastic, though, is crossed down on the weekly, which is lining up with us stalling out right here, potentially pulling back lower. Your yellow 21 EMA, 13,900, right there by that 14K horizontal we've been discussing. All right. I got to go back over some of this stuff. For any new time viewers, I can't assume that you've been watching every day. It could be your first time. All right, so moving along, let's look at some altcoins. Go ahead, hit that like for me. I hope I touched on everything. It's already been 23 minutes, so I'm sure I've definitely given out a lot of info there. This is looking messy. Altcoin lightning round. So let's take a look at the 4-hour chart, and we'll just scroll through the altcoins, because on the daily I know they all look pretty similar, but let's see, with Bitcoin getting this bounce, bullish divergence, and you have that 21 EMA resistance. A lot of the charts will look like this, guys, but maybe we'll see something a little bit different, and maybe there'll be a play there, okay? So, Ethereum, below your yellow 21 EMA, also bullish divergence RSI, hinting at the cross up, hasn't quite happened yet. So right now it looks like Bitcoin is slightly in the lead. Litecoin, I'm not seeing the same bullish divergence on the 4-hour. As you see, because lower prices, and you actually did get a lower RSI, but some bullish divergence on your Stoch, and you can look at that on the Stoch as well, getting a cross up, but you're also looking at the 21 EMA resistance, and you even have the 200 EMA resistance on the 4-hour. So you still need to break above, just like Bitcoin. Cardano actually above the yellow 21 EMA. And you can see it also was, showing resistance there and there as well. So will Cardano close above? We'll have to see. Same, you have that. Well, this one is different. You do have the rising RSI, but your price also rose. You didn't have a lower low there. So I can't say it's bullish divergence, but it is good to see that you're bouncing off that 200 dark green simple and poking above the yellow 21 EMA. There's still over 3 hours till this 4-hour closes, so we'll have to see. But for the beginning of the weekend, so far so good. You're not going to see much volume over the weekend to give you too many hints. I do want to look at the Bitcoin dominance real quick. On the daily, your Bitcoin dominance has been drifting up with that stoke. So it's getting high, and often when the stoke gets high, you will see it cross down, and when it crosses down, the dominance is falling, which means altcoins are outperforming. So basically, if Bitcoin leads the charge this weekend, you could see the stochastic continue to rise with dominance rising. However, if we see the altcoins have a real big pop this weekend, the dominance will fall and your stochastic will cross down. None of this has happened yet, so this is what we'll watch for. All right, moving on. XRP, the snapshot's coming soon. I'm not trying to play the snapshot myself. I looked into it more. The airdrop, you will only receive 15% of your Flare or Spark token. It might be the Flare protocol Spark token. I don't know, guys. You know how difficult it is to keep up with all of these coins, and I don't do videos on this, but I'm also looking at all the stocks as well. And to me, once I realized it was 15% airdrop, and then the remainder would be paid over the course of 2 years, I kind of lost interest. I definitely, I put my XRP where I can receive the airdrop, and I'll be happy to receive the free coins. But I'm not trying to do anything crazy. Some people are trying to move their entire crypto portfolio into XRP right before the airdrop, and then as soon as the airdrop or the snapshot right before the snapshot, as soon as they have a snapshot, they'll move everything back to their altcoins. To me, that seems like too much work, and it's going to be volatile. You're going to see price could rise right before snapshot on XRP and then sell off at the end of it. I'm content with how much I'm holding XRP. Moving on. But that's something you can do. But that's also why I think they're only giving you 15%, and then they'll spread out the rest over the course of 2 years, because they know that that's what everyone does on hard forks and airdrops. They know that's what people do, and they want their Flare, Spark, whatever, to have some value. So they want people to actually value it and not just use it as a free money opportunity. So it makes sense. And because of that, it's keeping me from playing the airdrop game. So it's working. The strategy is working. We'll see if it has any value. I did see an exchange is going to have that Spark token on its exchange for trading. So we saw all the exchanges were going to support the airdrop, including Kraken and Coinbase. That was good to see these major exchanges supporting it. And then to see an exchange will have it for trading availability is also the next key, because if you can't trade it, what value will the Spark token have, right? So good news. We'll see what happens. All right, moving on. Link. So almost 30 minutes. We're going to go faster. Link, 4-hour low stoke, looking to cross up 21 EMA resistance. A little bit of bull div band. Hasn't got it crossed up. Looking to possibly cross up. No bull div there. Pink 10 SMA resistance, and your 200 EMA 200 simple resistance. Yellow 21 EMA not as good as the other ones. 10 Tezos, 21 EMA resistance, low, ready to cross up. BAT, Brave token, same signature under the 21 EMA. Polkadot, same signature, looking for the cross up below the yellow 21 EMA. Kasuma, same deal, looking for a cross up below the yellow 21 EMA. YFI, poking its head above the yellow 21 EMA, more of a cross above. So far, Cardano, YFI have looked the most promising. You just need that 4-hour confirmation first. Uni, well below the yellow 21 EMA. UMA, it's a DeFi below the 21 EMA. All of these are pretty much below or right at or just above the yellow 21 EMA, looking for confirmation, next 4-hour candle, looking for the stoke to cross up, potential bull div on the RSI, Cosmos / Atom. All right, already hit the resistance, a little rejection, but staying above the pink 10 simple and trying to close above the yellow 21 EMA. Some bull div a little bit here, yes, and your stoke already crossed up. So Cosmos actually has a bit different. So this one's probably the best signature I've seen because you've already fought with that resistance and now trying to fight back above it, where the rest are beneath it still or just now fighting. Okay, EOS below the yellow 21 EMA. Numerai below. We're getting into shitcoin territory. Excuse my French. Pardon moi. Stellar below 21 EMA. Looking for a hint of a cross up. But you know what? If you can bounce right here, get above the yellow 21 EMA, you're not too far from getting above all moving averages. And on top of that, something you can see, this lines up pretty much with those moving averages. So if I hide the moving averages and just do a downtrend resistance, we can just do this red. You can see that there's a downtrend resistance, and then you throw on your moving averages. Your moving averages are lining up with that downtrend resistance. And you'll see this time and time again. Diagonals often line up with the moving averages. So, you could do the same here with Bitcoin. If you did a downtrend of resistance here, okay, now throw on your moving averages. That yellow 21 is right where that downtrend resistance is. Okay, if you did an uptrend right here, we'll do this in green. Throw on your moving averages, and it's lining up with my 200 EMA and 200 simple. All right, but when they line up, it's confluence. Multiple indicators showing the same thing can add strength to whatever it is that you're looking for, and means that there's going to be lots of people looking at the same thing as you as well. All right, so you can use your trend lines, or you can look at the moving averages. All right, let's keep going. 33 minutes. I don't want to scare anyone with super long time on the video. Stellar, where are we? Maker. Let's look at Maker. 4-hour. This is probably the most ugly 4-hour. You're getting a cross down from the top here, below your moving averages as well. Let's see. OMG. Below. Still looking for a cross up. ZRX below 21 EMA, getting a cross up potentially here. Kyber, it's above the yellow 21 EMA, but you're hitting that 50 simple blue right here. Watch out for Kyber. Watch out. You can see the RSI trending up. Your stoke already crossed up on the 4-hour. If you get rejected here, this will cross back down. You can see how you're chopping there on the stochastics. But you broke this downtrend you broke this level here on the RSI. You can see that. I'll zoom in. You can see this downtrend on Kyber's RSI. You broke above it and kind of bounced off of it. So maybe Kyber could be in play here. And everything is in the green pretty much. All these coins are in the green in the last hour. So you can't see it here, unfortunately. Maybe I can slide this over real quick. No, that's not going to do it. On the far right, it'll be green, but it only turns green. It's not the past 24 hours like CoinGecko was. It's going to be for this daily candle. So there's only been 57 minutes in this daily candle, but I'm looking at lots of green. YFI is up 6% in the last hour. Kasuma's up 4%. Uni's up 5% in the last hour. You're seeing a potential bounce across the board. You're low on your Stokes here, low on the RSI. It wouldn't be unreasonable to get that bounce. We also know that on the weekends, typically are more retail, and retail typically is more bullish. So often you will see some good bullish action on the weekend. Some weekends have been amazing for altcoins actually as well, and we know that altcoins are driven by retail. But keep in mind that there's less liquidity, so if there is a whale that decides he wants to dump on everybody, he can still do that pretty easily on the weekend. So volatility to both sides. So guys, I think a potential bounce for this weekend looks in play. Looking back at the Bitcoin chart, 4 hour, looking for a cross up, looking to close above that yellow 21 at EMA at 18,260. We saw Cardano is well above it. So I think after scrolling through, I kind of already forgot what I was looking at. Maybe you guys wrote down something. You got to take some notes. YFI and Cardano look the best to me, but things can change, guys. I think overall it could be a good bounce, and I do like that we're breaking above the yellow 21 EMA on Bitcoin. We'll just have to see if it can close above it and if the altcoins will follow. But guys, I'm just looking at a Bitcoin in the last hours up 1.74%. Cardano's 5%, Litecoin 4%, Ethereum 2%. So all the altcoins are outperforming. In the last hour, you can see kind of wick action. So turning red, this would lead me to believe that the dominance should fall. The dominance should fall. I don't like to get on low time frames with the Bitcoin dominance. The daily is usually what I like to look at. So if the altcoins continue to pump harder than Bitcoin, we should see the dominance fall here and possibly get a cross down on the Stokes. All right. I think that's enough for me today. Thanks for tuning in. Hit that like for me if you haven't hit the like for me. Leave a comment with any feedback. Subscribe if you're not subscribed. And everyone have a great weekend. Hopefully lots of profits. Rolly roll!